Dear friends of Volumetric Trading, welcome from Eduardo Buratini to this video analysis for August 28, 2025, covering the SP 500 and NASDAQ as usual. So let's start with the SP 500. And we've had, let's say, in the last two trading sessions, so to also refer back a little bit to the comprehensive previous analysis video I had already published, it basically just consistently stayed within the established distributive zone that we had clearly identified, so specifically within its defined range, which was precisely between 6,460 and the broader area of 6,500. And LT, break time equals 0.5s / and GT. This consistent behavior is quite noteworthy. Well, the 6,500 area, in my opinion, the most important event to highlight for this analysis is that it hit 6,500, even though we didn't quite reach the level of the previous all-time highs, which were a few points higher, around 6,510. We had yet another price test. This happened yesterday at 6,505. So let's say that after staying well within its most important and significant distribution area, which we can roughly see here, precisely between 6,460 and 6,500, it then made another attempt to decisively break above the previous highs. And it wasn't able to create new all-time highs by just a few points because, as we can see, the difference was really minimal. So we can basically consider this high that was made yesterday as a failed double top. This would be, let's say, the most appropriate definition. Yeah, the high was made, just as we can see, the high of yesterday was made right at the close. And after the close, we saw a pretty significant retracement of about 40 points due to the release of some of the quarterly earnings reports. So let's consider that the price, riding the significant wave of these recent earnings reports, corrected quite substantially and rather significantly. From a purely order flow perspective, it did not particularly leave behind especially important volumes, but there was a truly noteworthy and considerable short pressure that became quite apparent. Obviously, this is due to the fact that since earnings reports are always released after the RTH, regular trading hours, close, the impact on volumes is clearly limited. Okay? But it's still definitely a significant order flow action. Okay? So at this very moment in time, we can definitely and clearly identify this particular action as a significant rejection of making new higher highs. Okay. However, and what this means with MMM included in the context we're looking at is that the market basically still remains in its balance area. Okay. So most probably what we will have today during the current trading session is a continuation of the price staying well within this established distribution range. And in my opinion, here's the most important part of this distribution. It's now basically between, see this test the market did last night, still riding the wave of earnings reports and so on, but it stopped exactly at 6,460, so just below this whole area of volume that we're seeing here. So let's go ahead and highlight this for a moment, okay? Obviously, this is yet another important signal to help put all this distribution movement into context, because yes, it did reject from the highs, but the lower part still held, just like the VWAP and the -1 deviation of the weekly VWAP, getting close to what had previously been an absorption of sellers. So basically, to keep it short but effective from a technical and analytical point of view for today, this is a price that should generally maintain its distribution limits right around 6,460 to the south, which is also marked by this absorption, and the most important resistances are in the area of 6,000, just below 6,500, so 6,497, where we can see that the short pressure really came in strong, especially last night after the data release. Obviously, I want to emphasize that all of this happened after the quarterly report, and of course it took place outside of the cash volumes, so it was a very significant short action, but clearly carried out with a relatively low volume. So it definitely has its significance, but it's a relative significance. It will certainly be important to see how these levels are actually traded in today's European session, and especially during RTH. Okay. So basically, let's say that the upper part of the distribution still remains around 6,500. Obviously, until we have a breakout with acceptance above 6,500, we can't say we've left this area. So basically, we'll tend to have a market that's pretty much balanced, right in this range between 6,460 and 6,500. These are definitely the most important levels to consider. A similar situation, but also distinctly different here when it comes to the Nasdaq, because if we meticulously look at what the Nasdaq showed us just yesterday, it's basically, yes, always the very same thing, because here too we find ourselves in a significant situation of clear and quite marked distribution that precisely goes between 23,450, give or take a few points, right in this specific area with a very strong delta impact and with a notably low volume. Area that basically determined the absolute lowest point of the significant movements that occurred immediately after the earnings reports were released. And LT, break time equals 0.5s / and GT, and its most important resistance zone, which defines the upper part of this distribution, ranges between 23,600 and 23,660. This is for two reasons. First, because at 23,600 there was an absorption of buyers right at the time of the release, immediately after the earnings reports came out. So let's say it's kind of the same dynamic we've seen also on the S and AMP wink with tongue sticking out. A relevant order flow dynamic, however, that happened with declining volumes, let's put it that way. So, in any case, we should take this with a grain of salt, but the absorption definitely happened in a very, very significant and clear way. But the even more important level, in my opinion, is this 23,660, which I already pointed out in the video analysis 2 days ago. That was actually highlighting the most important resistance area, which, as we can see, was reached and perfectly respected before the data release, basically maintaining the distribution around these two zones. So definitely the exact same idea applies to the Nasdaq as to the S and AMP wink with tongue sticking out 500. We're in a distribution range with very clearly defined southern and northern boundaries, both in terms of volume and order flow. Here we're talking about roughly 23,450 to the south and 23,600 to 650 to the north. Okay, it's clearly too early to talk about bullish or bearish views as long as we stay within this very well-established distribution range, which is also detailed by the reasons we've just discussed. So here too, for any potential bullish continuation, we absolutely need to see acceptance above 23,660. On the other hand, if the price is accepted below 23,450, that could signal a possible change in scenario, leading us to retrace to definitely lower levels and, in any case, outside of this distribution context. And so, for this reason, at the moment everything is confirmed as markets in distribution. Developments need to be monitored outside of these two, or rather, since we've talked about two instruments, limit levels, which currently need to be seriously evaluated during the session. Obviously, this analysis should be understood as being solely for educational purposes and not as an invitation to solicit public investment or to take a position. Thank you in advance for your attention, and I wish you a good day and successful trading.